Alaikum, and a very warm welcome to all our worthy investors, analysts, and shareholders to this 2024 corporate briefing session of Pakistan Petroleum Limited. We wish to start the proceedings with recitation from the Holy Quran, and I would request my colleague Mr. Naufal Gazda to please recite a few verses from the Holy Quran.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم إنا أعطيناك الكوثر فصل لربك وانحر إن شانئك هو الأبتر صدق الله العظيم.
Jazakallah Naufal. Ladies and gentlemen, my name is Ali Jafar and I'm the Company Secretary of Pakistan Petroleum Limited. This session is being chaired by our Managing Director and CEO, Mr. Imran Abbasi. He is joining us from our Islamabad office and he is ably assisted by the CFO, Mr. Khalid Rahman, and the leadership team of PPL. The order of the day is that we have a brief presentation for you. We would run the presentation and then after the presentation on the operations and performance of the company for the financial year 23-24, we would open the floor for questions. Investors and analysts are requested to post their questions in writing in the comment section, and they would be taken up subsequently at the end of the meeting in the question and answer session. So I would request my colleague, Mr. Shujat Bhatti, to please display the presentation. Can we go to the next slide? The first slide is on capital and shareholding and the group structure. This is exactly similar to what was presented last year. So if we can skip the slide in the interest of time. The only thing to mention that we have added is we've mentioned that the Pakistan Sovereign Wealth Fund Act 2023 was passed and the shareholding of Government of Pakistan stands transferred to the fund, except that this is exactly the same as last year. So we can move on to the next section, which is to be presented by our CEO.
जी अस्सलाम वालेकुम आवाज आ रही है सब आपको कराची में
It's clear, sir.
जी जी अस्सलाम वालेकुम ladies and gentlemen, analysts, friends. I'm sorry I couldn't be in Karachi for this, but you know I had to come to Islamabad for some work. So I'll give you a little bit of brief overview of our portfolio. Most of you would be familiar with this. PPL has a large footprint across the country. We have got about 48 exploration blocks, and we are producing from 22 producing fields as well. And as you can see from the map, our footprint is right across the country. Balochistan, Sindh, KP, and even in Punjab, we've got some operation towards the north. Next slide, please. So here's an overall scenario of what's going on in Pakistan as far as energy is concerned. As you can see that the top left chart actually shows you what kind of gas supply scenario landscape we are operating against. You can see that the supply is dwindling as is apparent from the chart on the top left. This last tax year or financial year, we were sitting at 4.1 BCF a day, out of which 3.1 is domestic and about 1 BCF a day is being imported through LNG. PPL's share is 20% of the total production of Pakistan, approximately 0.63 BCF per day. As far as oil supply is concerned, currently Pakistan is importing 301,000 barrels a day approximately. This is for the last fiscal year. And our production stands currently at about 71,000 barrels a day. PPL's share of the oil production is 17% or roughly 11.4 thousand barrels per day. As far as the energy mix of Pakistan is concerned, there's an interesting pie chart on the right, which tells you that primarily our energy demand is met by fossil fuels, coal, LNG imports, gas, and oil. The so-called cleaner energies are relatively a smaller percentage as of 23-24. Next slide, please. Okay, I'll give you a brief overview of what the company has achieved over this past year. A lot of this was explained during our annual general meeting and subsequent, and also it's available in our annual report. I'll start off with safety. We had a phenomenal year as far as safety is concerned. We had 0 lost time injury frequency and no tier 1 process safety events. I think these are the 2 very important milestones that we need to highlight. So we had a unblemished safety record for the year. From a financial point of view, we had a highest ever profit after tax of 114 billion rupees. We signed 1 exploration block and 1 partner operated block. As you can see, there's been a focus on picking up quality blocks. So we have not been as aggressive this past year as we were in the past. International exploration, a very interesting period in our history. Through our subsidiary PIOL, we are actually drilling right now offshore. 2 wells, appraisal wells have been drilled, and we have found oil and gas as per prognosis. And the 3rd well is an exploration well, which is very exciting, and we are in the process of drilling it right now. During the year, we put a lot of emphasis on production enhancement because having mature assets, we need to work on our existing portfolio and try to have some organic growth rather than just developing new fields or through exploration. So the production enhancement element, we managed to add about 19 million standard cubic feet per day, which includes work on our SUI compressors. This project was concluded. It was a long project, but we concluded it on time and on budget. We had a discovery from an exploration standpoint at Chim East 1, and our partners had 4 discoveries in Tull and Latif block. As far as the diversification is concerned, we have signed an agreement with the Degan Exploration, which is a subsidiary of FWO for mineral exploration in Balochistan. And the Rekodik project, where, as you know, we are partners with Barrick Gold in that big consortium. The feasibility is on track. The results have now started coming in, and we hope to conclude the feasibility study by December 2024. As far as corporate achievements are concerned, we had one of the largest CSR programs for the year. We contributed 3.7 billion for the betterment of our people in our operated areas and non-operated areas. We won the 2nd prize in ICAP Digital Technology Awards, and we have also got the 2nd prize as the best corporate report for 2022. And finally, bronze award was by SAFA in public sector entities category. Next slide, please. As far as work program delivery is concerned, 23-24 was a relatively busy year for us. We delivered 6 exploration wells operated and 4 in partner operated. As far as development wells are concerned, we did 4 operated and 3 partner operated. Next slide, please. Production, as you can see, has been going down. I mean, it is really attributed to natural decline because we didn't really add any new fresh production to our portfolio during the year. But having said that, we also suffered from curtailment due to back pressure in the SNGPL network, and there's a lot being said about it because this really has to do with the LNG imports that are coming into the country, which puts a lot of back pressure on our facilities, and we can't put as much gas as we would like to. Similarly, Kankot is another challenge we are faced with. Our Kankot gas goes to Genco, which is really the power plants in Guddu, and they have not been able to take as much gas as they have contracted. If you look at the bottom left, it shows us the breakdown field-wide gas production. As you can see, the bulk of our gas is coming from Sui, Kankot, and Gambard South, and the balance from the partner-operated assets. Oil production, as you can see, is again primarily from Adi, and then the 2 partner-operated assets, Tal and Nashpa, which are in the north. Dog Sultan is operated by PPL, and we have had a slight uptick in production from Dog Sultan during the year. Revenue mix on the top right shows that PPL still is at about 61% gas revenue and the balance liquids, and that sort of contributes to our challenges with circular debt. Next slide, please. I think for the financial overview, I'll pass it on to the CFO. Thank you.
Thank you, Imran Saab. Okay, this slide represents financial highlights for 2023-24. As you can see, we recorded highest ever sales and profit after tax. Sales was 289 billion and highest profit was 114 billion. The revenue increased mainly due to positive price variance, and which is offset by the negative volume variance due to lower offtake by Genco and in Concord. We also recorded a positive effect in taxation due to reversal of income tax provision on depletion allowance. Next slide. On the left side, top and left side, we have revenue versus profitability. There's a growth in revenue and profitability. We recorded highest ever profit of 114 billion versus 98 billion last year. Similarly, revenue was also higher than last year of 289 billion. On the right-hand side, we have traders. The line bar is showing accumulation growth in receivables, which is showing the decline in the growth. Last year was 40% growth, and in the current financial year, it was 13%. So our traders still stood at 578 billion, which needs to be addressed by the stakeholders. We have another graph of cash dividend payout. We have improvement in this, and the board has decided to now 6 rupees per share for the financial year, which was approved in the AGM, and consequently the dividend payout was 14% versus 7% last year. Return on equity is we have maintained return on equity by 18%, although in 2021-22 it was 12%. So we can see improvement in return on equity in the last years. Next slide, please. Okay. So this is, as we have seen, this is the sales versus collection graph. We can see improvement in the collections last year in June 2024. The collection ratio was 81% versus 53% in previous year, and consequently we have collected 276 billion versus 182 billion in the last year. On the right hand side, we have a pie chart. We can see two dominantly customers have receivables. SNGPL 265 billion, SSGCL 291 billion, and we have small amount in Genco and others. Next. Okay, over to Imran Saab, please.
Thank you, Khalid Saab. Right, like all companies, we have our challenges as well. Trade receivable, primarily due to the circular debt attributed to gas. As Khalid Saab just mentioned, that things have improved. We are no longer accumulating circular debt because of the recent price revisions. Having said that, there is still sizable amount parked in the past trade receivables. So that continues to be a challenge, and we will work with our stakeholders to see how we can overcome those challenges and recover those funds. SNGPL back pressure, the one that I alluded to a little while back, that is a problem industry-wide. It's affecting PPL, OGDC, as well as other operators in the north. Luckily, we don't get hit as much as OGDC does, for example. But having said that, it nevertheless has affected our production capacity at SUI in particular. So the LNG line pressure issue has been taken up with the ministry. A task force, as far as I know, has been formed, which is deliberating as to how we manage the LNG imports so that they don't affect the offtake from our indigenous gas supplies. Low offtakes from Genco, I mentioned that as well earlier on. This really has to do with problems Genco faces with their equipment. I don't want to go out of line and say what the issues are, because that is something for Genco to manage. but the end result on PPL is that our offtake gets reduced all the time. Just to put it in perspective, the take on NPay was 150 million scuffs a day, and we barely manage about 100 million scuffs a day right now. It's actually below 100, and it's also quite sporadic. It goes up and down. Zafir project is the one in the Gambit South area. There was a stay order on that. The stay order was vacated in September 2023, I believe it was roughly. And since then, we have started the rehabilitation work on the project on a fast track basis. Natural decline in mature field is another challenge. Typically around the world, 5 to 10% decline per year is quite normal. We experience about 7 to 8 if we do nothing. But as you will see from the results, we managed to arrest our decline by doing production enhancement activities, and the end result was that we stayed below the typical 8% decline that we normally experience in such wells. The other challenge, talking about exploration portfolio and slowdown in large discoveries, this is a fact of life, unfortunately, in Pakistan. The large discoveries are no longer forthcoming. We do believe there are reserves and potential finds to be had in frontier areas, but those areas require investment, and now they're also plagued with other challenges like safety and security. And these wells are expensive, so the risk is high. Finally, award of the SUI DNPL has been pending for a long time. We are getting close. I know we probably said it in the last briefing as well, but this time we are really close because we have approvals from various government quarters, and we are hoping to sign this lease in the next month or so at maximum. And I did talk about security earlier on, that in the frontier area, the cost of security is actually going up quite dramatically. This matter has been taken up with the Ministry of Interior as well as the military. I have personally been in several meetings at the highest level to see what we can do about it. So that is a challenge faced by all E&P companies in Pakistan. Next slide, please. As far as where we are heading, our production forecast for the next year is 0.7 BCF per day. Seismic campaign, we'll continue to be aggressive with our seismic campaign because that feeds into our exploration portfolio. We'll do 900 line kilometer of 2D and about 50 square kilometer of 3D seismic. Plan is to drill 8 exploration wells and 2 development wells in the next year. Exploration appraisal wells are planned in our operated area at Dhok Sultan, Shah Bandar and Gambit South. As I mentioned earlier on, that in PIO and Abu Dhabi, we are actively pursuing the exploration and appraisal commitments. 2 appraisal wells have already been drilled, and we are drilling the exploration well right now. After that, there's another development well and perhaps even more. The feasibility study for the Petroleum project, as I mentioned, will conclude in December 2024. Some of the projects that we are working on are the BLZ mining, which is a barite lead zinc project in Khustar. We have a feasibility and we have the government of Balochistan as our partner. This project will contribute significantly to our mining portfolio. And also we are working on production enhancement opportunities in Gambit South in Sindh. Next slide, please. I think that's all I have from my side. Thank you.
Now we move on to the question and answers session. I would request my colleague, Mr. Shujat Bhatti, to ask the questions, and the CEO and the CFO would respond to those questions.
Assalamu alaikum, everyone. First question is that is the feasibility study for Aqueduct concluding in December 2024? And yes, it is. The feasibility study is on track, and it will conclude, inshallah, in December 2024. We are still receiving questions, very few questions right now. The next question is on the update on the barite lead and zinc project. Kindly provide some view on the quantum of expected investment and the timelines, returns, potential of the project. So, Imran Sahib, if you can answer this question. The next question is about the status of the BLZ project. What is the status of the BLZ project?
Okay, so as far as the BLZ project is concerned, the operating agreement has been approved by the government of Balochistan. The financing agreement is pending. There were some questions raised by the Balochistan government. I would like to point out that the board approved PPL to fund the 50% equity share of the government of Balochistan. We are hoping that this would be concluded. I am planning to go to Balochistan in the next week or two to actually engage at the highest level and try to get this off the line.
And the expected amount of investment is more than $150 million, and the returns are very high. Next.
Thank you.
Next question is that it's rather a statement is good that it's good to see improvement in the operating cash flows of PPL, recording highest ever cash flows. What are the tangible plans and strategy in place to get the huge amount on the balance sheet of the circular debt?
Actually, Government of Pakistan is working on it right now. They formed a committee comprised of CFOs of the industry and headed by DG Gas. So working is on track, and hopefully we'll see some results by the end of this year.
Can you please elaborate on the PIUL project?
Say that again, Shujat.
The PIUL project and the estimated reserve size, etc.
I didn't get it at all.
Sir, the question is about the PIOL project, Abu Dhabi Offshore Block 5. And its status and expected preliminary reserves, if there are any.
Okay. The PIOL project, as we have submitted an FDP for the first 3 fields. It's been with ADNOC, and it's being. We haven't got an approval yet, but we expect to get the approval by December 2024. The first FDP is on 3 fields which were already discovered by ADNOC many years ago. So we have drilled appraisal wells on 2 of them. Just to confirm the contacts and the volumes, and the results were more or less in line. The third well is an exploration commitment. We are actually chasing a stratigraphic play, which is being drilled as we speak. The well after that is going to be another appraisal well. That will be the third accumulation on which the FDP is based on. So once the FDP is approved, we have already done a pre-feed on what the infrastructure will look like. That result was shared literally about a week ago with the board, and ADNOC is comfortable with that pre-feed. The next step would be to go into a feed before we go into FID for the project.
Thank you. Next question is again about the huge cash balance of 145 billion on our books. So the question is that keeping such huge cash in books negatively affects the ROE. What do you plan to do with this cash?
Actually, we all know we have a huge lease extension liability to SWI, which is around 45, in September is 48 billion plus 6 billion of CSR in training and production bonus. So it's all come together 60 billion for the current year. So probably we utilize this cash to settle this liability. As MD has already informed you, we are very close to this DNPL finalization. So we have to settle this liability, and we have work program for the current year, which is also aggressive and committed, and we are also committed in recording. So this year we will be paying more cash calls as compared to prior years in the current year on account of recording expenditures.
Do you plan to use debt to finance your operations?
No, so far we don't foresee any such thing.
Are you expecting a net reduction in trade receivables in financial fiscal year 2024-25?
Yeah, in September there is a decline in receivables. We have already published our quarterly financial statements. You can see there is a decline in trade receivables in September. We are expecting and we're trying our best to reduce the current level of trade debts in the current financial year.
Update on the new EPCC contract for GPF3, which was under litigation. I think Imran Saab has already answered this question. How is gas pricing mechanism different from crude oil pricing, as both are linked to international crude oil prices? So basically, gas price is linked to international crude oil prices, and every petroleum policy has a different formula under which the gas price is calculated. And for example, 2012 petroleum policy is the most lucrative versus the 2001 policy. So every dollar change in crude oil price affects more for the gas fields which are priced on 2012 versus 2001 or the previous policy. So this is based on a sliding scale. How much capex do you estimate for the current year?
It's around 38 billion.
38.
A couple of repetition and questions. So do you see prospects of foreign investment recorded? Currently, it is under evaluation phase, so nothing has been materialized yet. Please share a ballpark dollarized cost per meter of exploratory and development wells. So it's
Do we have that information handy?
it's around like $4,000 per meter. $3,000 to $5,000 per meter. It very much depends on the terrain. For example, if the terrain is not so complicated, it drops down significantly versus the terrain in, for example, Dhok Sultan sector.
Yeah, it varies from well to well because there are different depths for each well.
Let me add to this. This is a difficult question and probably not a question we can answer that easily, because in some areas the cost is going to be a lot lower and the others it will be a lot higher. It also depends on the fact that in some exploration areas, because we drill two types of wells, there's exploration well and a development well. Exploration wells, we don't know where we are going, so we're not prepared for, we try to prepare as best as we can, but we do get hit with surprises because it's exploration. So generally speaking, exploration wells do cost more. Development wells should cost less in general terms. Furthermore, if you are drilling a number of development wells in a row, then the cost progressively reduces per well. So I don't know if I
think in northern areas, we have higher meterage. And when we go in southern part, like in Sindh, we have shallow wells and the meterage cost is lower than the north. I don't know whether we have a number associated with the south or not yet, but I think we can work on it and get a number.
But I can, one thing we do from a drilling perspective, that for every well, we do benchmarking against our peers, and we do have a number and we do put targets for the drilling team, which we do maintain. I don't think we have answered the question properly, but it's a difficult one to answer. I can't give you one number saying it costs us so many dollars or rupees per foot.
Yeah. There are now like a list of questions again and again coming up on the past circular debt. So if you can, we have already answered that question. So one question is, can you tell how much overdues people will recover in FY25? As said by CFO, the collection ratio right now is close to 100%. So we are very much optimistic on the full recovery of the point forward billing. And for the past circular debt, the government has to devise a strategy. For example, we are pushing for one-off bond issues which can settle the past separate debt. This is one of the options.
Yeah. And this happened in the past year.
Yeah. Again, questions about extra cash and dividend outlook, which we have already answered. There's a question on the reserve side, size of ADNOC and Abu Dhabi offshore. Unless the FTB is finalized, we cannot publish that number.
Since there are no more questions, then Ali, we can
Hassan, can you please type in your question? In fact, you have typed in your question, okay? So, Hassan's question is again about where do you see the normalized dividend payout ratio going forward? Right now, it's around 14%. In history, historically, it was close to 50%, but it will very much depend on the cash flow generation and our CapEx profiles and our commitments.
Yes, true.
One question for Palekar Saab. How promising is frontier exploration right now? Maybe Imran Saab can also answer that.
I'll let Palekar Saab answer.
Again, if you look at PPL, last for 5 to 10 years exploration history, we are the only company who has stepped out of the normal areas where we already have established our hydrocarbon prospectivity. So going into frontier is always challenging, and the big reserves or big resources are actually lying in those areas. We are drilling, and you must have seen the results of the known areas. It is between 25 to 100 BCF. But if you want to get a big discovery like Sui or Mari, it has to be in frontier areas. So being an explorationist, I'm very optimistic that globally we have 10:1 ratio, success ratio. Here in Pakistan, we are looking at 3:1. But again, frontier area is quite challenging, but the bigger discovery is going to come from this frontier areas. And we have actually, we do have leads and prospects, which are, we are targeting around multi BCF and TCF leads in those frontier areas.
Just to add to that, to put things in perspective, I showed a slide earlier on where we said that our daily gas requirement is about, I think it was about 4 BCF. So for 4 BCF a day. So just to keep it in perspective, that if we have a discovery of 25 or 30 BCF, it's really no big deal, and it's not going to make much of an impact in our energy landscape. So as Palekar Saab was saying, that if we, the big hundreds of BCF and TCF fields are most likely not in the proven fairways. So we have to venture outside. Now that comes at a cost and at a risk. So it's a balance as to how much we want to invest. It is effectively risk money. So, we try to exercise as much prudence as we can in our exploration portfolio.
Okay. Next question is on the update on Mergan block.
Okay.
Mergan export.
Yeah. So Margand, as you know, is in a frontier area. As far as the geology is concerned, if anybody is interested, Palekar Saab will brief you. But I can tell you one thing purely from a holistic point of view. Margand area is in a very sensitive area where there's a lot of security concerns at the moment. There have been incidents recently So really, the security cost over there is going really very high. Secondly, we have one well over there, but that is not sufficient to justify a full-blown development. We need to drill more appraisal just to understand the size and the quality of the gas that we find over there. If once we drill the appraisal well, the next step would be to look at a development. But please be aware that the nearest infrastructure is about 100 odd kilometers away, at least 100 kilometers away, through quite hostile territory. So it's going to be a challenge whichever way we look at it. Having said that, we are progressing the studies on the appraisal well. And once we are comfortable that we are willing to commit the funds, we will drill an appraisal well and appraise the discovery properly so that we can lead towards a development scenario.
How aggressively PPL would participate in the upcoming offshore block auctions? In the interest of this sensitive information, we can say that we have cash and we will look forward to a good level of participation. Could you shed some light on onshore geographic seismic survey cost per square kilometer? 3D square kilometer ranges from area to area and depends on the security situation. It roughly ranges between $25,000 to $50,000 per square kilometer. If SNGPL gas pressure issues are resolved and if Gencos take up the gas available with you at Kanthkot, what is the potential production capacity of PPL? Kanthkot,
we have a production capacity of like 145 million standard cubic feet per day, and it is going down with a decline rate of 13%. But we are still hopeful to develop the field if Genco takes off.
Yeah, so it will roughly add another 50 to 60 MMSCFD because currently the Kanthkot's production is hovering between 90 to 95 MMSCFD. And as regarding SNGPL gas pressure, we faced a curtailment of around 25 million scuffs in the first quarter.
But it is improving. For last 1 week, we have seen the improvement in the gas pressures, and now we are producing at the optimum production from Suina as of now.
Yeah. What is the current operating cost per BOE and how does it affect as per the terrain information? It's roughly around $3 per BOE with respect to the overall portfolio, and it varies from field to field depending on the maturity level of the field. What is the decline rate, whether the field is new or it's the plateau phase or near its decline. So this concludes
Just to add to that, our operating cost per BOE is if you look at worldwide everywhere, you will see that our operating cost is actually on the low end of the spectrum.
True.
The last question is that you mentioned about drilling of more wells in Dhok Sultan. What is the production potential of Dhok Sultan's field?
Well, it's growing up. We have a appraisal well coming up, and the field is making up the production. And in future, if we do more appraisal and development wells, definitely there is a potential to produce more from Dhok Sultan.
Thank you very much.
Since we have run out of questions, we've answered all the questions that were posed on the comment section. We thank all the investors and analysts for their participation, and we declare the meeting closed. Thank you very much for your participation.
Thank you, everybody. Thank you, Imran Saab.
Thank you.
Thank you.
Record.